On this video, I'll be discussing about the candlestick patterns. You understand how to read the candlestick. This video is mainly for the newbie. So if you are not a newbie and you probably know this, I think this video is not for you. But if you're a newbie and you don't know much about the financial market, this video is for you as a newbie. So when identifying the bullish candle and the bearish candlestick, the color red that you always see in the chart, the color candles red that you always see in the chart is called a bearish candle, and the green candles the green candles you always see in your chart is called the bullish candlesticks. And the difference between these two charts is because the bearish is moving downwards. All right, when price is moving downwards, it's going bearish, and when price is moving upwards, it's going bullish. So these are the difference. When the price is moving upwards, price is definitely going bullish. And when the price is going downwards, price is definitely moving bearish. So when the price is moving bearish, you notice this level price will open at this particular zone as a bearish, and then push down. You see it because price is going down, it's pushing down to the next low, which is this. Price push down to this low and then closes. You notice price push down to this is the highest level that the price made when pushing down, and then closes at this zone. This is the body of the candlestick. From here to here is the body of the candlesticks. Then this is the wick of a candlestick, and this is the wick of the candlestick. You see it, price always make a wick. All right, that is for the bearish, and this is for the bullish. You notice the bearish, this is the low, and then this is the high for the bullish. You see that? And this is called the wick. Bullish open from the down and then closes from the up. While bearish open from the up and closes from the down. You know, this is a low and this is a high. So the difference is that the bullish open from the down and closes from to the up, while the bearish open from the up and closes at the down. So those are the two differences about these candlesticks. And those are the two differences about these candlesticks. So this is in charts. We're going to the charts and then we're looking at these candlesticks and how to use them. All right, and these are the candlesticks. Each candlesticks determine the kind of time frame we are trading. Like now, I'm currently on the 4 hours time frame. So each candlestick is 4 hours. Each candlestick is 4 hours. Each candlestick is 4 hours. You can see the green price move bullish down, and then this is bearish, price move bearish. So when the price is going down, it's moving bearish, and when the price is going up, it's moving bearish. So how to determine when the price is on downtrend? It's when the price is sloping from the up to the down. You see it. This is when you determine that price is bearish. You see, you notice what happened here. Price broke out of our resistance. Price broke out of the trend line. Boom. What happened? Went back up, came back here again, went back up, and finally came to the trend line to retest it. See what the price is doing. Price finally came to the trend line. When it retested it, what happened? It moved back up. Okay, sorry about this. Let me delete this. I think price came all the way down here. Sorry. And then went back up. You see, its price came to retest on this particular zone, which it broke out and then went back up. Okay, immediately it's retest. What happened? It gave you a candlestick pattern. This is a doji, this is a hammer. This to this compared together, giving you an engulfing candlestick. As it appears, see the pressure of the buyers, the bullish push up to the moon. So this is when you determine that price is on downtrend. You can say price is on downtrend, sloping downwards. So if price is sloping downwards, it's on downtrend. So you notice price sloping downward. It's on downtrend, pushing this way. It's on downtrend. See that? This is how you can determine that price is on what downtrend trade. Another example of this trade is this. You notice price move bearish. Bearish is always going down. Price move bearish downward, and you notice price sloping down. This is when you notice that price is still what downtrend. When price broke out, notice what happened. When price broke out, retest on the trend line, what happened? It shoot back down. You notice it went down here before I retested up back again. So this is it. Price is on downtrend. This is how you can determine identify a downtrend move. How you can identify a bullish move. A bullish move, you notice price pushing down from here, riding up. This is when you can identify a bullish move. You see what happened, price broke out, retraced, and then went down, then before heading back up. So when the price is sloping up, price is constantly making bullish move down to the upside. You see that? And price came here, tried to retrace back, and then make another bullish move down to the upside. See that? When price broke, retrace, what happened? It shoot back down. See, and this is uptrend move compared to the downtrend move I sent to you. I showed you previously. Downtrend is price is sloping down. Price is sloping downward. This is uptrend move. Bullish, uptrend. Bullish, price is bullish, uptrend. All right. So if you notice, there was a consolidation around this particular zone. There was a consolidation around this particular zone, this high, within this high, and this low. There was a consolidation. The buyers and the sellers were fighting here. First, who break out, who go in. And finally, the buyers took over, broke, and look at it. It just broke with a body candlestick. Retest back. What happened? Price continued trading back up to this high. Would have been a massive move and massive profit. See that? So this is a consolidation. What I just showed you is a three market structures, which is an uptrend, price going up, creating higher highs, creating higher lows. This is what sorry, let me draw it where. What I just showed you guys is an uptrend move, price creating higher high, higher low. So this is what I just showed you guys, an uptrend move. And see that there's an uptrend move showing that the price is what's going up. Whenever price hits, it will reject back down. And a downtrend move, price going downwards, creating higher low, lower high, moving back down. So this is how you can consider that price is what's going down. This is bearish market. Price is what bearish. This is how you can identify that price is bearish. You see it, this is a bearish market. And this is a consolidation market, which I just showed you price, finding it hard to break, break, break. So on this particular zone, so what you have to do is to mark out this zone, these lows that we are finding it difficult to break, and mark out these lows that we are finding it difficult to break. So whichever way it breaks out, that will be your entry. That will be the direction of the market. All right. This is a consolidation market. A C, this is a consolidation market, and this is a bullish market. A B, this is a bullish market, and this is a bearish market. This is a bearish. This is bearish, and this is bullish, and this is consolidation. This is consolidation. Price is consolidating. So these are the three phases of market price consolidating. If you in whichever way it breakouts that you entered, buying and selling within the trend line, you see buying and selling within this one. This is bullish, this is bearish, this is consolidation. So what I just showed you is three market structures that we have in trading. See, it's consolidation, bearish, bullish. I believe you guys learned one or two from this video. And as a newbie, I believe this video have enlightened you about the market, how to identify a bullish, how to identify a bearish, how to identify a consolidation, how to identify the candlesticks, and the kind of time frames you have to use, and the candlesticks. This candlestick, each of them, because I'm using it 4 hours here, so each of them is 4 hours. So if you go down to the 15 minutes, each will be 15 minutes. Go down to the 30 minutes, each will be 30 minutes. So depending on who you are, will determine the kind of time frame you have to use. If you are a kind of patient type, you like swinging, 4 hours is good for you. 1 hour is good for you for watching. 4 hours best for watching. And if you're a day trader, go down to the 15 minutes, 30 minutes to watch your chart. And if you're a scalper, 5 minutes, 1 minute. So this is it for the candlestick. This is it for the candlestick pattern. If you are not subscribed, if you haven't subscribed to my YouTube channel, it's the best time to subscribe. All right. Subscribe to my YouTube channel to learn more about trading. So this is it. Take care and bye for now.